Hello folks, it is Mentor speaking. Welcome back to the 68th episode of the Luganda series on YouTube. As usual, it's a new concept related to smart money concepts, and we're going to use institutional levels for entries and my smart trading entries. We are looking at long-term liquidity. With the long-term liquidity, we are not looking for 2 pips, we are not looking for 20 pips, we are not looking for 50 pips, 100 pips. We are looking at 300 pips and above. That's why we've called this a long-term liquidity for long-term investors. If you are a short-term investor, the strategy will still help you, but I prefer you being a long-term investor. What is this concept all about? We need to look at 3 things first. One of them must be an old swing point or a long-term swing point. We have an old low here. It can either be an old high or an old low. Between this low and this high, we must have relative equal highs and relative equal lows, both sided, okay, 2 sides. Between this low and the new high, we must have a consolidation that at least gave us relative equal swing points. It must give us relative equal highs and relative equal lows. And once we talk about relative equal highs and lows, you know that these are retail traders playing support and resistance. This is what happens in this concept. We have a move up, we create an old low, we are not taking this low. We are consolidating, creating relative equal highs and lows. We are accumulating orders. This is not an Asian dealing range high and low, because just like I said, it's a long-term investment. In here, we are consolidating. If we are to buy, if we are to go long, we need to have an old low. Then we trade above the relative equal highs. Above these highs, I'm going to look for 2 things. I'm going to look for institutional levels and smart trading entries. If I'm to sell, once price runs above these highs, once it gives me relative equal highs and relative equal lows, rallies above, I am going to look for a sell above these highs. But I'm not just entering the market. I'm going to look for institutional levels and smart trading entries. If I sell here, I'll put my take profit below this old low here. Okay, that is the concept. That's how the concept works. As a long-term investor, it can still work for you as a scalper, but for the last few years, this thing has worked for me as a long-term investor. I sell here, my take profit will be down here on this same old low. Now below this old low, if I'm to buy, I'm going to look for the same thing, institutional levels and smart trading entries. I hope you understand the explanation. If you don't understand the concept, the thing is we must have an old low or high, but in this case, let's say, for example, we are selling, we are buying rather. We have an old low, price consolidates, creating relative equal swing points, then trades above the relative equal swing points. Above the swing points, I'm going to look for an institutional level or a smart trading entry to sell. My take profit will be here. I don't want to take my profit on the next institutional level or smart trading entry, no. Very simple. Then if I'm to buy again, I'll buy below this, but I'm going to look for 2 levels, institutional level or smart trading entry. In this case, I am not just entering the market like a blind man. Remember, time and price matters a lot. So let's jump to a short-term trade. I show this to you first. Let's start with the short-term trade. So let's look at the USD card. This is the USD card. We have relative equal lows. We also have relative equal highs. Okay, we have relative equal lows and relative equal highs. Now, below these lows, I'm going to look for institutional levels. I already have my smart trading entry and an institutional level down here. Above, I have my smart trading entry here. The institutional level is just a bit close, but I'm not going to trust that. So once I do this, let's see what price did here. This is a 15-minute time frame on the USD card. Price trades above these highs. Okay, this is a retail break of market structure. This is a retail break of market structure. Retailers are now buying because they're seeing high highs and engulfed candles here. Price trades to what? The smart trading entry. Time and price matters, folks. Time and price matters. Every time I tell you to be patient and wait for price to bring itself to you, this is what I mean. Price comes to the smart trading entry, the 40 level, right here. You sell there. Where are you putting your take profit? You're putting your take profit below here or here. But again, let's use an institutional level to enter the market. Let's use an institutional level to enter the market. So let me say, for example, you have your take profit right here. Let's first look at the number of pips. Let's look at the number of pips. So let me say, for example, these are 100 pips. As a scalper, those are 100 pips. Not bad on a single day, on a single trade rather. So price consolidates, then sells through this level. Remember, I told you we need to have price trade below these lows. This is for scalpers. If you're a scalper, this strategy will help you. It will work for you. Now, if you're to go long, remember we said we're using institutional levels. This is a 20 level below the relative equal lows. This is the magic. It must first trade above the relative equal highs, then sells below the relative equal lows for you to buy. Now, do you see this? It bought once here. Now, time and price matters a lot, okay? Time and price matters a lot. So you buy here, where you're putting your take profit, you will have your take profit above this swing point here. How many pips are those from the 20 level? Well, I think you buy what they sold, 115 pips. 115 pips. So since this strategy is all about long-term liquidity, when I talk about liquidity pool, I mean relative equal highs. That is a liquidity pool. Liquidity pool up here, liquidity pool down here. So this is the euro dollar on a daily chart. The magic begins. This is the euro dollar on a daily chart. We have an old low here, or the buy side liquidity. We have relative equal lows as well. Let's start with the relative equal highs here. Relative equal highs. Price trades through to this level. Okay? Price trades through to this level. Which price level is this? Well, you're going to look for smart trading entries under institutional levels. So this is an 80 level. This candle comes in. Let's look at the high. An 80 level. Just 16 pipettes. Let's have an 80 level. That is 80 level. Sorry. Let's have 80. Okay, that is 78. Yeah, for those looking for sniper entries, boom, there, on a daily chart. If it does this on a daily chart, where we're putting your take profit, you see this old low here? You have your take profit here, from there to here. Once price does this, it trades below this old low, then buys 3 days. Oh, not 3 days, but I think the whole week, 7 days to, okay? Now, if you're a long-term investor, let's look at the number of pips. These are 300 plus pips. 300.5 pips above here. What does price do again? Price gives us a high that doesn't trade through that level. It doesn't trade through that level. It gives us a relative equal high. Trades below, comes again to the institutional level. If you remember me telling you about my swing points, if we close above this swing point, where are we putting our take profit? We are putting our take profit above this high before we look for reversals. As soon as we close above this high, the swing high, my take profit will be here. If you go back to the other episode that I talked about how to trade swing points. See this candle above there? What are we looking for? We are looking for potential reversal zones. If you want to buy and sell what you bought, it's still okay. Trades above the relative equal highs for liquidity. Then it sells from there. Okay, it sells. This is the euro dollar. It sells after doing what? After trading above these highs. The institutional level pushes price lower. Let's look at another example. Let's have another example because I don't want to have a long video explaining one concept. Why did we sell here? Remember what happened. We are coming here. The same thing is likely to happen here. The same thing is likely to happen here. We are likely to come to this high, then we drop, or we push price higher. That's why I won't trust lower time frames for this concept, but it will still work for you. But if you want to be a long-term investor, enter the market on a Monday, then you come out with your profits after 2 to 3 weeks, because that's what I do sometimes. So it trades there, then drops. Okay, it trades there, then drops. It first takes these lows, the old low, buys, then drops again. Okay, let's look at the USD JPY as our last example. Let's look at the USD JPY. So this is the euro, the USD JPY. Again, history repeats itself. At first, we have relative equal highs here, relative equal lows. Price trades below these lows here. Once price does that, I'm putting my take profit up here before selling. In here, I don't see a swing point. I don't see a swing high. I don't see a swing high in here. So I won't trust price closing above a swing high, but I will trust the relative equal swing points. Let me extend this line. So below relative equal lows, taken. This is my first indicator that we are selling after running above these two highs. This is the first indicator. We are selling after running above these two highs here. Price trades below. Now, which level are you using to enter the market? We are not going off the script or the concept. The concept says our entries on institutional levels below the long-term lows here, the buy side liquidity. I will buy on the 50 level. Why am I buying on the 50 level? I am buying on the 50 level because of this. Buying on the 50 level because of this. Relative equal highs, relative equal lows, old low taken, I'm looking for an institutional level below the old low. Because of this, this is how this concept works. And if I'm to sell, I am going to sell above these highs. What price level am I looking for? I am looking for an institutional level or a smart trading entry. Okay, that is how I'm entering the market. I'm trying to make sure I have a short video right here and here. Price, let's see, let's play because I don't want it to. So price keeps buying after taking liquidity below this old low and below the relative equal lows here. Keeps buying and okay, it gives you a retracement, then trades above this high. Above these highs, I'm looking for the same thing that I looked for below this low, 50 level or a smart trading entry. We have a smart trading entry above here. We also have an institutional level somewhere around here. So this indicates, oh, sorry, I've lost my chart. Okay, here we go. So what does this one indicate? This one indicates that I'm going to sell Waguluwachi, the relative equal highs, smart trading entry. Once price takes a low, we are hunting for highs before we sell. Once price takes the long-term swing point, we are going to wait for it to trade above these highs before we go short. You're only getting the so-called sniper entries, sure deal. You buy here, if you put your take profit there, this is, oh my God, 600 plus pips, almost 700 pips. So what if you already mastered the strategy? You buy, and at the same time you sell. This is how profitable traders look at the market, not using retail concepts. 1,000 pips just on a single currency pair, you're earning yourself pips. I'm not talking about money here, we are talking about pips. A profitable trader must not consider how much money they're earning, but how many pips are they taking home. So that is what I had for you in this episode. We are going to look at another episode of the same example, but this time we are not using relative equal swing points, but we are using sell side and buy side liquidity. It is not complex, it is very simple. If you watch and rewatch Otegere concept season. This is when you only want to be a long-term investor. It can still work for you, just like I said, on a short-term trade, like 15 minutes, 30 minutes candlestick. But if you want to be a long-term investor, here Nebobo trading at $10 per pip. It's okay because you're a trader, but as long as you have smart trading entries. I hope this was insightful. Let's end this video from here. Then we create room for another episode.